Well, NASDAQ dropped back below the 10-period moving average. Again, it's not gotten a bearish reversal of conditions for momentum. And again, this is just looking at momentum. Remains red or green for an extended period of time. It can mark a trending move. Watching is if we start breaking the trend line that I'm talking about in this video, do we try to carve out a bottom immediately, or do we get a trend extension down and our 200 is down here at the 16,350 area? Are the candlesticks getting rejection at the 20-period topping tails that are going to give us the next leg down, or are they trying to get inverted hammers and set up a higher low at the trend lines of support? I'll show you in this video. Watching, we're still negative with the awesome oscillator and the MACD. So I'm watching, do we start getting red and maybe come down and get a divergence here, or maybe hit the 200 or whatever? Or we get a bigger trend extension of this decline, a measured move, and start, getting something bigger that eventually takes out the 200-period moving average. But I'm watching to see if we'll get a bearish reversal of conditions. So far, we have not. We had that rally back up to the 20-period moving average. We got rejection at it. We are below the 10 here on NASDAQ daily chart. Now, same thing for the S&P. Now, the S&P did not. It dropped back below the 10 yesterday and tried to get it back above it today. It failed at the 20 again, as I'll be talking about. But we did not flip the cloud back to red. We could if we start breaking down from the bear flag pattern, which I'll be talking about in this video. And then, again, do we get a divergence and try to bottom out? If that happens, we get a lower low scenario and try to bottom out and rebound back up to go fill the gap at 5,200? Or do we start seeing red bars go lower than this level and we start getting a trend extension of this decline that, again, gives us a measured move where we get something bigger? We're at the moment of truth. The bear flags that have formed on the 60-minute charts at our trend lines of support. Now, well, the S&P got an inverted hammer or possibly a topping tail at our 20-period moving average, which you'll see in this video. We got a possible bottoming tail, hammer. So again, see the bear flags begin to play out to the downside. We could still see the VIX come up here, and again, see the S&P go lower. And again, the VIX could have topped before the S&P bottoms, as so often is the case. If this is a bottoming tail and if this is a topping tail and we start breaking down on the S&P. Talking about both scenarios in this video because we're at a trend line of support on the S&P. We're at the 20-week moving average. Break those support levels, you're going to get a bigger dump. If you get a bigger dump, we can get traction off the 50 and the 200 here as we're getting a bullish cross and go up higher on the VIX. Still just may breach this level and form a bottom without getting a big sell-off. But it could be that we get a continuation of the move if signals continue to remain bearish. It's possible we try to form a bottom if the VIX holds below these trend lines that we've turned off of. The MACD rolls over, moving out of positive territory. Stochastic already is. It got the crossover last week. If the VIX rallies up and we see the S&P drop, it still may be that we just form a divergence and try to bottom out. Do we get a bottom with the Fed or a continuation of the trend is what I'll be watching. Please support the channel with the link directly below. If you follow the link, it'll take you to a secured site. You can donate any amount you want or make it a recurring donation. If you like the indicators, if you like the charts, please let me know that by supporting the channel. I don't have any sponsors. I turn them all down because I don't want to make merchandise of you and sell you a bunch of junk that you don't need. I just ask that if you like the charts, please consider supporting the channel. I just put it all out there for free and just ask you to do what you can to help out. But I do need you to respond in order to make it work. So please consider supporting the channel today. Anything helps. All the money on YouTube pretty much made from sponsorships. I just choose not to go that route. Rather than having a pay service, I just put it out there and ask you to do what you can. If you like the charts, if you like the indicators, please consider supporting the channel today. I thank you for your consideration for that. Just going to review a couple of my signals. Again, we had momentum shift with trending candlesticks, but there's no buy signal. The sell signal is still in place. These signals have been pretty stinking good, if you ask me. Watching for the next buy signal, and maybe we see that if we try to form a bottom, but if we get a trend extension, and the sell signal can remain. Just want to review some of my signals. Can't fit them all, but just a few of them here. Again, here still bearish. Now here where we've seen a short-term bottom marked, again, momentum is still bearish and so is the trend. Here the cloud is still bearish. We're still on a sell signal with the trend, and again, oscillators are still in negative territory. So there's still risk of more downside until we start seeing signals bullish. We have a bullish reversal of conditions for momentum short term. More signals would have to turn bullish in order to try to find a bottom right now. And again, with the rally, some momentum signals turn back to bullish. Back above the rainbow cloud, we saw the momentum line turn back to bullish, and it's still bullish, but the trend tried to change and it turned right back to bearish with the rejection off the 50. Although balance of power has moved into positive territory for now, it's got to stay that way, and we've got to not take out this low right here if we're going to try to find a bottom. See the bear flags begin to break down. Momentum will likely shift right back down. S&P daily chart here. Critical mass. The critical mass line remains bearish. It's going flatlined as we're kind of going up and getting a rebound to the 20-period moving average, as I said earlier. That took us just above critical mass, but momentum, critical mass oscillator, remains negative. Even with the rally back up, the micro trend is still bearish, still red, still pointing down. Now, I told you previously when we were rallying up, I told you again to be watching VWAP resistance. Again, that was near our 50-period moving average. And again, from these two peaks, that's VWAP resistance down here. We have the VWAP support. Should we break down to a new low? And over here in this area of consolidation is where we're trying to bounce. We didn't quite reach it, but where we're trying to bounce right now. So some VWAP support, some VWAP resistance. And in order for this to end, again, you got to be able to get back above the VWAP resistance levels. Again, we turn directly off of it from our high. That's the little red line that you see right there. So I'll be watching these support and resistance levels with VWAP support and resistance. Critical mass cloud 2.0 still bearish, with the critical mass line in the cloud still bearish. Critical mass cloud again still has a sell signal, still bearish. The signal still bearish. We do drop down to a new low, and it's possible we start seeing more stars and more dots, which would be showing accumulation. It was those stars and dots that tipped us off to the distribution at the top, and warning sign of the arrow there, the upside down triangle, warning that a potential top was put in. Had that at the bottom. We tried to get a reversal right there, couldn't do it, and the signal was canceled out, and a new bullish signal, and we resumed the advance with the signal remaining intact, only with some distribution there. So again, could see that if we move to new lows. And again, I'll be watching, do we form divergences on signals and so forth. Some momentum signals have turned up. We're turning off the 20 period, but most of the trending signals are still bearish. And I'm watching things like the McClellan oscillator. Do we end up selling off more and end up forming a divergence before all is said and done? Or did the extreme mark a bottom at the 20-week moving average? The trend line of support, as I'm talking about in this video. And again, market breadth indicators like stocks above their 20-day moving average. Should we see a divergence develop here, or can we validate a higher low? And again, we're at the channel trend line of support, forming a bear flag. So we're at a make it or break it moment. I encourage you to watch the video all the way through, and I'll show you these trend lines that I'm talking about. Just taking a look at these risk-reward models. Again, NASDAQ is at extremes and is trying to curl back up now and get a bullish cross here at extremes. Okay, and again, either we're going to see it begin to turn back up and carve out a bottom, or you're going to remain at extremes for an extended period of time like we did over here, okay, and end up going lower. Okay, we're over here, ended up going lower. So which is it? That's why I'm watching the trend lines I'll be sharing with you, but we also have this longer term trend line. I'll be showing you one on the daily from here to here with our bounce off the 20, or our bounce off of break of the 20-week moving average and trying to get back above it. Now, the S&P is not getting a bullish cross yet, but it is at extreme. So again, this is telling us that either we're going to see a bigger move down and see this remain at extremes for an extended period of time and get another leg down, or you're going to try to recycle back up and turn back up and try to find a bottom. It's not done yet, so we're going to be looking if we get a bigger sell-off, a post-Fed sell-off, or we try to rebound Signals remain consistently bearish for now. Of a percent higher, the Dow was up 87 points. After a 500-point drop, it recovered. S&P 500 down 17, again, being lower than that, rebounding up, going up about 1.25%, up about 60 points, and then giving it all back and closing down 17. Down about 1/3 of 1%. NASDAQ, same thing, 1/3 of 1% lower. The Russell was 1/3 of 1% higher. So the Russell and the Dow were positive. The NASDAQ and S&P were negative. And the VIX, let me just zoom out here. The VIX was ended up down 1.66% down to 15.39. Earlier we saw volatility with NASDAQ as super micro computer plunged. Revenue miss, and we saw AMD and again conductors weighing on NASDAQ, and then we had the Fed announcement and Powell's press conference. I told you I've been watching the 10-year Treasury note yield to see what would happen surrounding the Fed meeting. Do we start going up towards the upper channel, or do we start moving down to the lower end of the channel? Yesterday we had a rally, gave all of that back, and we were down about 2% today, dropping back below the 10 period. We'd previously dropped below it, bounced up, filled the gap, and then now we're turning down. So again, we've been pretty much going sideways here, and I'm watching to see which way we're going to break, whether up further to try to fill the gap I've talked about, or down to move back towards the 50 period and the trend line and horizontal support. And this is important because, again, if we start seeing it go down, that would help the market. If we go up further, then there could be more market volatility. Dollar also down. It had risen, but then it turned down. Now we're seeing the stochastic rollover here on the dollar. So again, if the dollar 10 years start moving back towards their 50 period moving averages, and again, we got the bullish golden cross on both with the 50 now above the 200, they're pointing up. But if we pull back, again, that can help the market. Watching to see, do we get a higher low rounding our 20-week moving average? Does our low from a week and a half ago hold? We take it out and get another leg down to form a divergence before getting a bigger rebound. And I'll show you exactly what I'm looking at. Testing week, we're testing the rising trend line. So far, those levels are holding our touch from the 20-week about a week and a half ago. It is easing the pace of the balance sheet reduction. We saw the rally surrounding release of the statement, and then as we moved Powell's press conference, and then once Powell's press conference ended, we gave it all back. Now here it is on the 5-minute chart, and again, we had the breakout of this channel. We had the the gap lower at the open, and then we had some chop and slop. And then going into getting the Fed statement, we got above the 50 period and got a breakout here surrounding the Fed statement. Pull back a little bit, and then the rally continued with the press conference. We rallied up about, again, 1.25%, just under 1.25%, right around 1.19. We're close to that level, and right around 60 points higher, 59, 60 points higher or so, give or take. And then Powell finished his press conference, and we gave it all back and went negative, and we're coming back to back test this trend line now right here. 50 is still below the 200 here, so we'll be watching to see if that changes. We'll be watching to see what happens right here. As we're hitting a key support level, the trend line I've been talking about. And just a few takeaways. Again, the Fed is going to ease the pace of its balance sheet reduction. Rally got some steam as Powell said that the Fed's next move will likely not be a rate hike, and the market applauded that. But he said that shorter-term inflation expectations have increased and that the decisions are now going to be, again, continuing to be meeting by meeting. So he talked about a longer path to get to the 2% target level, but said that the Fed was still on the road to get us to a 2% target level. I could also like that Powell, again, is using some other concerns about stagflation. All over the internet, there's been talks with the last GDP number about stagflation, and Powell is saying that he doesn't see that. And again, we still have positive growth. I talked about when that first happened. Again, it is being talked about everywhere now. Concerns about stagflation. Powell put that to rest. A sigh of relief that Powell took a rate hike off the table, at least for now. The market had priced in 7 rate cuts. Now it's been hovering between 1 and none. And I looked at it right after Powell, and right now it's at 1. It can change. It changes constantly. But right now it's 1 cut either in November or December. It was at none. The market was way overly optimistic about cuts happening. Too many cuts. It priced in too many cuts and them it happening too soon. Really, Powell's telegraphing that the next move is not going to be a hike, but the next move is going to be a cut. He's also telegraphing that they're for longer, and the Fed is still sticking with the soft landing scenario, have this painless path bringing inflation down, and that's just not going to be the case. They're going to need recession to solve that inflation problem. Again, I don't think inflation is going back up to the highs where it was. It would be ticking back up, and it is. Eventually, they're going to need the recession to resolve that issue. Powell is very optimistic that inflation is going to begin to come back down. Again, I don't think it comes down to his 2% target level in 2024. But the Fed still believes that they're going to be able to pull off this soft landing. Remember, we recently had the dollar breakout and the 10-year Treasury note yield breakout. They both broke the downward trend. They both broke overhead resistance. In order for the dollar to top and reverse, we got to get a recession. In order for inflation to properly be dealt with, we got to get a recession. And the inverted yield curve is telling us we're going to have a recession. I believe the inverted yield curve is correct. Powell made it clear that the Fed needs to have more confidence. Inflation is coming back down to its target level before they cut rates. He made that clear. Again, the rally was a relief rally, and we gave it all back. Powell took a rate hike officially off the table. Then that he addressed the stagflation that has been talked about all over the internet, and said that he didn't see that would be an issue. Again, just to recap here, and that they still think a soft landing is possible. So again, it's part of the Kool-Aid, by the way. Again, begin to see the yield curve uninvert. Talked so much about. See stock market sharply move lower. That's going to be followed by a recession and the Fed pivot. Now we have an inverted yield curve right here, and that means that it's in negative territory. It's inverted, meaning that the shorter term rate, the 2-year, is higher than the 10-year. Okay? Begins to uninvert when it starts going back up here above zero. Uninverting, going to be signaling that recession is about to happen. You're going to see the Fed begin to pivot, and we're going to move into a longer-term bear market. And again, if we look at the NASDAQ, and that was the NASDAQ we saw in the other chart too, when we began to see sideways move begin to happen, really that began the downturn, and that's what we're seeing right now. But when it uninverted, eventually we saw a much bigger drop in the market longer term. And again, the NASDAQ ended up dropping 82% here with the bursting of the tech bubble. The steepening of the yield curve led to the decline in the market. I'm watching two levels very closely. I'm watching the 20-week moving average. We had a test of it a week and a half ago on that Friday to close out that week, three bars ago. Okay, that was on a Friday, so it's about a week and a half ago. To see, does this level hold and that Friday low hold from a week and a half ago, or do we take this level out and get a bigger sell-off? Now, as we're testing, and right now we're coming back and we're testing the 20-week, and we're also testing the rising trend line. So these are the support levels. If they break, we're going to get a bigger sell-off. And here's the trend line right here. Okay, and here's the trend line. Here, again, about a week and a half ago or so, we hit that 20-week moving average. Again, I drew this lower boundary here, this parallel boundary, before we ever reached it because I was expecting this gap to be filled. But I pointed this channel out, and I've talked about it over and over again. Again, do we break this level and start moving down towards the 200 period and towards the 50-week moving average, or do we try to bounce this level, or do we just get a breach of this level just below the 100 period and try to bottom out? But I told you, again, if the 20-week moving average, the test of the 20-week moving average from a week and a half ago, if it can hold and mark a bottom, then again, you can see the higher low scenario. Rallying back up, and again, I've talked about getting rejection around the moving averages, the 20 and the 50, and that happened. So far, the support is holding here with the trend line and at our 20-week moving average. So I'm watching to see, do we take this low out? or do we not? And if we do, is it just that we take it out and that's the end of it and we bottom out, or do we get something bigger? I talked about the Fed meetings have marked the turns in the market. And again, I've talked about this. And again, here, the black, I have the rate hikes. In the red, I have the rate pauses. All the FOMC meetings. And again, you'll notice we've been getting the pattern that I've been talking about. You get here a bottom, you get a continuation, and here a top, a continuation, a bottom, continuation, a top. What will this be? Now, again, I think you either have a shot at a continuation if we break the 20-week and continue lower, or you can get a bottom with the Fed, because we didn't rally back up to 5,200 ahead of the Fed. We already topped last time. Remember, we peaked the day after the Fed meeting. I told you to watch for a post-Fed sell-off. NASDAQ and Dow peaked the very next day. The S&P peaked, and then it went back up, and it went 3 points higher and formed a little miniature double top, and we talked about that at great length and detail, and those sell signals played out very nicely. So the question is, what are we going to get now? Okay, I think we can rule out a top right here. This is probably not a top, so is it going to be a continuation downward, or is it going to be that a bottom forms? And a bottom can form either with the higher low or the lower low, and then we can try to bottom out and rebound. So I'm looking here for either the Fed meeting to give us a bottom or give us a continuation of the trend. I wanted to show you this chart because I think it's important to note that the Fed meetings have been calling the tops, bottoms, and the continuations of the trend, the continuation of the trend, the continuation or the tops and bottoms. So again, I think you either have a continuation or a bottom developing here. We'll be looking for clues. We are getting an inverted hammer. An inverted hammer is a possible bullish reversal pattern if this trend line can hold. I'll talk more about that in a minute. But again, I want to show you what we have, the testing of this trend line and the testing of the 20, and we're trying to bottom here. We're trying to find support here. You're still forming a bear flag. You're still forming a bear flag there. So if the bear flag plays out, again, we can get a bigger jump to form a little divergence at bottom, or a stronger decline that would take us down towards our 200 period and towards some of the support on into this area here, the consolidation in December. So you're forming a potential bear flag at the trend line of support. Here it is on the 60-minute chart. Here's the bear flag right here. And again, gap lower today, we violated the trend line. Okay, we violated the trend line here, but if we include the shadow, and I excluded it previously, if we include the shadow, now you have a perfectly parallel channel there for the bear flag. Okay, so we saw the sell-off here at the support and resistance line. Okay, that little orange line right there. We came back here, we violated that trend line, and really hit the longer term trend line, the channel line that I showed you earlier. This is a bear flag if we see it break down and confirm by moving to a new low. Okay, so that's what needs to happen if this pattern is going to be a continuation of this. And if that is the case, then you have potentially a measured move that could take us down to the 200 period moving average on the daily chart, down back towards the December lows. Having gapped lower and tried to turn back up, we've reached extremes here. Now, remember, it was up here that we had reached extremes, and I talked about that at the time when we rolled over. I told you either we're going to roll over and sell off, or you're going to try to form a divergence right there and go and hit the 200 and then roll over, one or the other. Rolled over, and we sold off, and we came back, and we hit the trend line of support on the daily chart. It's forming this bear flag right here. I've continued to point out the 50, the green line, is still below the 200 period moving average, but we still have the possibility that the bear flag is not yet done. And again, we still may try to hit that 200 period. It still may happen. But if we break this level, start breaking this low, then I'll be watching again. Do we get an immediate bottom? Or do we get, again, a measured move, a trend extension down towards our 200 period moving average? So I'll be watching that. Momentum has reached an extreme, and it started trying to turn up here. So again, we'll see what happens. I tried to turn back up over here, and again, it just gave us a bounce, and that's what we're getting right now. So again, it could still end up forming a divergence like what we had over here, and you have to go to a lot lower lows to bottom. Other times you could reach an extreme and it could turn back up and it can mark a short-term bottom. Like right here, we turn back up and it marked a short-term bottom right down here. What we're watching going into the rest of the week is, do we start getting a post-Fed sell-off or do we get a post-Fed bottom? Do we find a bottom down in the Fed? And that's why I showed you that chart, my Fed chart. Get a continuation down, a post-Fed sell-off, or do we get a post-Fed bottom? Try to find a bottom. Even if we go lower, we could just move just slightly below this level and still try to find a bottom and get a 5-leg push lower. Well, look where we rally back up to. We rally back right up to the support and resistance line, slam the brakes on, and turn back down. And now we halted right at the trend line of support. So again, I'll be watching the bear flag here. And that gave us a possible, and I said possible, inverted hammer. Now, it may be a topping tail if we start seeing a sell-off and start taking out this low, but it's just not at the very top. But if the trend line of support can hold, you might try to develop a bottom. But we rallied up above the 10 period after breaking it yesterday, gapping lower. We rallied up to that 20 period and got rejection there. So continue to get rejection. We rallied up to the 50. I told you, going to get rejection at that 50 or move slightly above it and get rejection at the 200 in the 60-minute time frame. We got rejection at the 50, so I was looking for that to happen. We turned down, and now we've tested the 20 again right here after, again, overthrowing it to test the 50, getting rejection there. So what I'll be looking for is, does the trend line hold with the inverted hammer, and we try to form a bottom. And if so, you got to get back above the 10 and be able to stay above it, and we try to make our way back to fill this gap. Or does the bear flag play out? Does the bear flag play out and we start moving down to take out the 20-week and take out this low over here and take out the trend line of the channel? Now, if this does play out as a bottom, we'll need to get back above the cloud. We'll need to get back above the 20 and hold above the 10. So I'll be watching that. Do we try to form a bottom here or drop and try to form a bottom and then rally back up to this gap fill at 51.99? Is this a continuation again where we get a measured move and you get this much, much bigger dump? Takes us back towards the December lows, back towards the 200 period in the daily and the 50-week in the weekly. Again, moment of truth is a trend line that I've been showing you and our 20-week moving average. We have a bearish alignment of the moving averages. The 10 is below the 20. If we try to bottom out, again, the tangling of the moving averages back and forth could again be suggesting a topping process. If we don't get another push down, then we potentially have a possible 3-leg down that could still take us up to 5,300 and new highs if we try to bottom. If we take out these levels and you get a 5-leg push down, then potentially possibly got a 5-leg push lower that may give us a lower high at the 5,200 area. So again, this trend line that I showed you earlier, the moment of truth. So is this a topping tail and we're going to go lower, or is it an inverted hammer at key support? Now, same thing for the NASDAQ. Again, it rallied up to the 20 period, just under the 20 period, got rejection, and it ended up down 122 points, about 0.7% for NASDAQ 100. And we closed near the lows, and again, we had a rally, and big rally back up, and it fizzled out, and we gave it all back. And again, rejection off the 20, back below the 10. We've taken out the 100 period here. And we went sideways for 7 straight weeks, giving the illusion that the rally was still continuing as, again, retail investors were buying, but the institutions, they were selling. And even back over here, the institutions were selling over and over and over again. And then now they're continuing to sell, and they're selling this rally. Now is where we try to find a bottom. We have another trend line on NASDAQ as well. We break that level, or do we try to go back and eventually fill the gaps back up here? NASDAQ, it's near the highs right here. I told you that, again, we were going to top diversions is playing out, and I was looking for a post-Fed sell-off. We peaked the very day after the Fed, and we've seen this 8% drop. We've rebounded back up, and now we're getting rejection at the 20. Thing here, do we get another leg down, or do we go a little bit lower and bottom out, or do we get a higher low and bottom out? Again, here's the diversions. Again, we went sideways for 7 weeks. We have formed a triangle and a rectangle that I showed you on my last chart, and I've shown you on other charts. Again, we have this trend line now right here from the low that we had a week and a half ago. So we're watching, see, does this trend line break and we start moving to the 200, getting a bigger drop, or do we try to establish that as a bottom and get a higher low? So again, if we break down and we start going lower, you're going to likely see a divergence develop on the RSI. So want to keep in mind, we have the 10 and 20 below the 50. We have the 10 and 20 pointing down, okay, and prices below both the 10 and 20, and they're both below the 50, and the 50 is now flattened out and curling over. So again, you break the trend line here, taking out this low right here. It's going to open the door for either a divergence to bottom out or a bigger dump. NASDAQ's also being hurt by the semiconductors, which have been under pressure, as mentioned previously. Again, want to continue to point out that our rally back up from 3 days ago found resistance right at the horizontal resistance level of the breakdown of the rectangle there, halting at our 20-period moving average. Now, again, the NASDAQ also has a bear flag on it, potential bear flag. If we start breaking down and taking out these lows, again, be a continuation of this. Bear flag is not done. I'll be watching the 200-period moving average just like on the S&P 500. And again, you can see on the 60-minute chart here, the rectangle that we back tested right there. So again, I'll be watching, do we break, do we bounce? Momentum looks the same as the S&P. Again, it reached an extreme, it turned back up here, but we gave back all of the gains of the attempted rally. Again, gapping lower and then moving in the other direction and then closing right at the trend line. Again, this trend line includes the upper boundary here, the shadow, the upper trend line. Again, I'll be watching the potential bear flag. Does it break down or not? If we try to build our way back up, again, watch the 200 and overhead resistance. Again, I want to continue to remind you that here in the 60-minute time frame, the 50, the green line, is still below the 200. So again, either there's more work to be done to try to carve out a bottom, or again, the possibility of a continuation. So we'll keep that in mind. Moving averages are still in a bearish arrangement on the 60-minute chart as well as on the daily charts.